This is a follow-up for the S&P reversal forecast that we made for March 25th, 2009. All signals reflect the fact that they're based on the S&P E-mini futures contract using the front month. Times are Eastern Standard Time or New York time. Signals are always provided in advance, but some signals may not be available until a later time and therefore not shown in the original report. CFTC disclaimer: if you risk it, you can lose it. No recommendations are being made. This is for educational purposes only, and all rights are reserved. Please visit us at greatesttradingtools.com and learn how we determine our signals and also get a free report. So how did the reversals do that we forecasted for March 25th? Well, let's take a look at a few of the reversals. Here's the hourly chart, and you can see the reversals that we listed. We had one expected for today, and just quickly, let's go over to our page where we're listing the times, and you can see that from 10:30 to 11:30 is where we listed for reversal. But we also had this reversal that was at the end of the prior day. So we knew and expected the market to rise directly off of that and then reverse here on this time and decline. Now there is a reversal that came out or was available early in the day yesterday when the market started trading that indicated the market would change direction down here, but I'm not going to show that. I'm just going to show what is available or was available at the time that I gave the report, and you can see how accurate that proved. The reversals for the 10-minute, also a number of them quite accurate. As I mentioned, we had a couple of reversals at the beginning part of the day, so that was a time that I was going to avoid trading. Right afterwards, the market breaks out and goes rather rapidly to the upside, and we have a reversal for ending the move. We have a low here, we have a high here, we have a low where it starts to consolidate. You see similar lows, and the market consolidates a little bit and then breaks lower. We see this high that indicates the market declining further, and we have a number of reversals. Now, what I don't show you here are the reversals that showed up during the day and allowed me to take some additional signals. And so I'm going to bring over this chart and show you those signals. And you can see, for example, that we have the high here, we have a high here, so we have low, high indicating the swing. And of course we even have the low down here, so the market, the exit of that or buying into that from that point to the upswing was also available. Some things that might be questioned is, for example, you might see this here, and you see that, okay, well, it doesn't appear to be a high. The market's still progressing, but there really is a high-low here. If you look at it, the market actually forms lower lows here, and if you were to go down to 1 minute, you see this much more clear, because here's the pattern that we're looking at on those signals. And the market rose up and changed direction and consolidated a little bit, and then finally broke and went higher. So the reversals were still accurate, but on a 10-minute, it's not always absolutely clear until you look at a lower time frame. So that's one of the advantages of using a higher time frame reversal and then refining it with a lower time frame, just as we do here with the hourly. As I mentioned before the trading of the 25th, that on this reversal we have a reversal that we expect to change the direction. So we go down to 10-minute and look for the reversal. Now among that was we had this reversal here that we were looking at, and of course there was another reversal that showed up a little later, and let me bring over the other chart that became available to us shortly after the market opened. And since this was a low, it was not in line with the hourly reversal because it's a high. We're not expecting the market to just have a high and low right away. We're looking for these two to coincide. So the 10-minute reversal needs to coincide with the hourly reversal, which was a high. So that would mean that this is the reversal that we would be selling off of. And so this is one of the ways that you coordinate the reversals, and you can see how well it would have worked. This is a follow-up for the S&P reversal forecast that we made for March 25th, 2009. All signals reflect the the fact that they're based on the S&P E-mini futures contract using the front month. Times are Eastern Standard Time or New York time. Signals are always provided in advance, but some signals may not be available until a later time and therefore not shown in the original report. CFTC disclaimer: if you risk it, you can lose it. No recommendations are being made. This is for educational purposes only, and all rights are reserved. Please visit us at greatesttradingtools.com and learn how we determine our signals and also get a free report.